Questions to ask to stay objective as a trader. What's going on, folks? Hope you guys are well today. So in this video, I'm going to share with you a list of questions I created, which are in no particular order, that I ask myself quite regularly during a trading session. Okay, so this does apply more to short-term trading, basically traders that are involved in the market in very short time frames. Call them scalpers, day traders, whatever. Basically, if you're holding trades for a matter of seconds, sometimes minutes, not more than that, it's called scalping. Okay, so here we go, guys. Don't forget to smash like on the video and subscribe to the YouTube channel if you're not already. Okay, this is a list of questions that I ask myself and that I try to stay on top of regularly while I'm trading. Here we go. The first one is, what is this market doing in a slightly bigger picture than right now? AKA the context of the market, okay? So I just want to make myself aware of what's happening in the market contextually. And by slightly bigger picture than right now, what I mean is about, 15-minute, 30-minute time frame, and as large as the daily time frame. As day traders, I don't think we really need to be getting involved with weekly time frames. I mean, sometimes it could help to look at it contextually or whatnot, but generally, I try to stay with the 15-30 minute to give myself a picture, like from a session to session basis here. Call it market profile, volume profile. That's basically what I use for context. The thing about this is that when it comes to the importance of all of these questions that I'm going to list for you in this video, I would say this one might be on the lower importance side. However, not too low, because I do believe that understanding the context of your market is very important to your trading decisions, but it is still not the most important, especially if you're scalping. What I'm trying to say is that you don't really need to worry yourself about trend on a daily time frame if you're trying to scalp a market right now, okay? It's irrelevant completely. Again, what is the market doing in a slightly bigger picture than right now? So what I mean by that is, look at the trading from a session to session basis, right? So for example, Wednesday, we saw the bears take control of the market and we were building value at lower and lower prices. So the market traded here, moved lower, traded here, moved lower, traded here, moved lower, closed near the lows, okay? The next day, in the morning, we start to catch a bid. Now the market's going up, okay? So the 15-minute, 30-minute bulls here are controlling this market at this point, so I don't think I would look to sell it. Now, chart traders might look at this chart and they're gonna say, okay, I'm gonna wait for the market to get to about here, and then I'm gonna sell it. Well, the reason you made that decision is because you're looking at what happened yesterday. You're not looking at what's trading right now. That brings us to the next question, and that is, again, in no particular order, where is this market valued right now? And where is it valued relative to its biggest correlation? Okay, so if we're looking at S&P futures, there's two other equity indexes that you need to be watching. Number one is the NASDAQ. Number two is the Russell 2000. Some people look at the YM also, but I don't believe it's a very reliable index to watch because it's only 30 stocks, and the movement of the YM will not really influence the movement of the S&P 500 just because of the broadness of the index. You know what I mean? So an index that has 500 or more stocks compared to an index that has 30 stocks. That's why I don't look at the YM. So where's the market valued right now? That's the most important part of what we're trying to understand here. Now, when you look at a chart like this, you can't necessarily see where the market is valued right now. That's why I use a third-party order flow tool to help me understand where the most recent two-way business is doing. Right now I'm looking at a market here, it's live, it's 11:53 a.m. and I'm looking at the S&P futures trading on a bid at 56.50. So you can see that the most recent two-way volume seems to be right here, right at 56.25 to 56.50. So I can objectively say right now that this market is valued around 56.25, 56.5, and now it's starting to move up to an area that traded volume around 57.5. Okay, now if I look at NASDAQ, I can see it's doing two-way business here at 33.5. It did some two-way at 29. So in my opinion, the only way to determine the value of a market is to look at where it's trading right now, or where it last traded two-way business, as I would call it, okay? And what I mean by two-way business is buy orders are buying the offer and sell orders are selling into the bid, and the price is not necessarily moving, meaning that buyers and sellers are agreeing on price. That's what I call fair value or two-way trading, basically where the market is currently valued at this moment right now. If you don't know where your market is valued right now, then how are you going to know where you should be buying it or where you should be selling it? Okay, that's what I'm getting at here. So I might be looking at NASDAQ and we're trading in a range, for example. And this is where the context comes in, right? Because you need to see the range. Sometimes we're trading in a larger range. And what happens in larger ranges is that the market will move down to the lower extent of the range. Then it'll start to slowly bid up higher. And traders are trying to sell it because they think it's going down. But in reality, if you look at the tape, you see that it's slowly getting bid up higher. and then sooner or later it shoots up to the top end of the range, and then they buy it at the top end of the range, and then it starts offering lower, sweeps back down, takes out their stop to the lower end of the range, okay? So that's an example of a market trading in a range, and you're trying to trade it like a breakout. So that's why context is important, accompanied by where the market is currently valued and currently valued relative to its correlations. That brings us to the next question here. What is this market doing right now? This is really interesting because the whole thing about charts is that when you look at a chart, you're not looking at what the market's doing right now. You're looking at what the market did an hour and a half, 2 hours ago, right? So what I have on this chart right here is what the market did this morning and today. So we see that the market went up. Now, because the market went up this morning, does that mean I'm going to buy it now? Absolutely not. Because if I look at what the market is doing right now, it could be something completely different than what was happening here, for example, okay? Now, what I could see from this chart is that on a 15-minute basis, the market has been going only up. So I will now look to see at the last area that we had two-way business to see if that is going to be defended by our 15-minute bulls. Okay, so what is the market doing right now? It's really not more complicated than that. I'll show you a couple of tools I use to determine what the market is doing right now. Okay, so a couple examples of questions I would ask myself is, number one, what was the last move of the market? So was the last move up or was the last move down? Are we in a range? Where is value right now relative to the last move that just happened, right? And a few tools I use to determine this. I look at the delta and I look at how the price is moving. So for example, in this case, the market was valued, it was bid at 55 for a while, and now we see a strong move up, and now we're bid at 65, and now it's moving up to 70. That's a market that's moving up. Okay, so there's no doubt about that. This market has moved up right now as I've showed that to you. And now it seems to be bid around 71. So another nuance is, how is the market moving up or how is it moving down? Is it shooting up and there's only one-sided volume? For example, the market shoots up and all of the volume is done on the offer and there's barely any volume on the bid. Well, what that essentially means is that there's likely some traders getting squeezed out of short positions. And it also means that as fast as the market moved up, if no one's willing to bid it at those prices, it can easily move down just as fast. The opposite of what I just described is two-way volume, is whereas the market is getting bid up higher on sell orders. That's something different. So for example, you see sell market orders hit the price at 50, then it's bid at 52, then it's bid at 53, and it's getting bid up slowly. That's different than if it goes from 55, then it trades all the way to 61 on mostly volume on the offer, and then it slowly starts coming back down to where it was originally, okay? So those two things are different, and that relates to how the market is trading and what is it doing right now. So all these things can get very nuanced, but they're important when it comes to looking at how your market is trading. That brings us to the next question. How is this market trading? What is the volatility like? What are the ranges of your market? Is your market moving around 5 handles at a time, or is it moving around 10 handles at a time? So this is something that you're constantly assessing when you're a short-term trader trying to engage in a market in real time right now. I'll repeat them now. What is the market doing in a slightly bigger picture than right now? For example, since the session started, has the market been going only up or only down, aka trending? Next, where is the market valued right now? And where is it valued relative to its correlations? Next, what is the market doing right now? What has been the last movement of the market? Is it going up? Is it going down? Is it getting offered lower on buy orders? Is it getting bid higher on sell orders? How much is the market moving on average? And what does the liquidity look like? Now, if you want to get a little bit more niche than that, which is of course what you do need to do if you plan to do this professionally, you need to understand these questions and how they relate to whatever method you're trying to employ on a trading session. One thing I focus on a lot is I'm looking at how the market is trading into my orders. I might decide to get in the queue at a certain price, and depending on how the market is trading before it fills my order or when it's approaching my order, I will decide to either remove that order or let that order fill. And that is something niche that comes with experience. I'm not going to explain it to you detail for detail in this video. If I'm looking to sell in a market, I need the market to trigger my order in a specific way. And if it's doing something else, then I will probably need to pull that order. Here's an example. I want to sell it at 91, but the market's at 82 and it's slowly starting to bid higher now. And I'm seeing a lot of sell orders getting absorbed on the bid, and it's slowly starting to bid higher. The market is slowly continuing to bid its way higher, and now it's at about 86, 87, and my order is close at 91. and it's still doing the thing where it's continuing to bid higher slowly on sell orders, then I am most likely going to pull that order, simply because what I can see right now is that the market is getting bid up on sell orders, and that is not a good sign for my trade. And my order is probably too close at this point. So I will either move the order further away or pull it out completely and maybe take the other side of it. So this is why short-term traders need to have this instant decision-making switch ability where you essentially have no bias. You're trading what's going on right now. So if the market's getting bid up higher, I might as well buy it. If the market's getting offered down lower, I might as well sell it. If the market has been going up here pretty strongly, I probably don't want to be fading against that. Okay guys, so all of this to conclude, if you are going to engage in short-term trading activities, you need to understand what the market is doing in the time frame that you're trading in. So if you're trading the market right now, you need to know what it's doing right now. Looking at a 15-minute chart while you're trying to scalp 5 points out of NASDAQ, it's not going to help you, okay? You need to look where it's valued right now. And this market is offered at 85. It was last bid at 78. That's an objective analysis. So I might want to bid it here. I might want to continue watching to see how it's trading, to see if it's good to bid it here. So maybe when it gets here, I might actually consider selling it here instead. So it all depends on what's happening right now, and the ability to switch your bias instantly is one of the most important skills for a trader. All right guys, so those are just some questions that I try to stay on top of during a trading session, and I'll catch you in the next video. Take care, bye.